Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Eddie Tothpick, Head of FX at ADM ISI. Good morning to you, Eddie. Now let's kick off with three currencies, starting with dollar yen. From a technical point of view, it's actually starting to get a little bit more interesting, I must say.
Dare I say it, but this could be a head and shoulders top, which I intimated last time we spoke. I said, it's going to come down. I'm not quite sure how far down, but it's looking to form the second portion of the final shoulder. So we've done the first shoulder, as you can see in the early October action, the head with a slight split in it, and a spike up there at the top, which is over October, November. And in the last week or so, we've bounced up and we are looking to see as if we're going to form potentially another shoulder. Now, we have a number of issues still. Should we go down below this key 110.91 fib, then which is a 50% fib of the move, I think, from about September through to July period as such, then we could negate this. If we go below the neckline, we could negate this at this stage because it's very nascent still. If we should exceed 113.5, which is the other shoulder, then we could negate this. And definitely if we go through 114.5, we will definitely negate this.
It's off the cards.
But an opportunity is for it to rally, move higher up to about, say, 13.5 area, maybe slightly less, and then hesitate and tip over and form the next shoulder. It's a highly technical market. The Japanese are big technical analysts. So I'm not going to be the only one who's seen this. We have a pipe bottom back in October. We have exactly another pipe bottom earlier this week, which is two market movements down very sharply, and then look almost like a double bottom, but literally right close to next to each other, two bars right next to each other. So it's key, as long as we stay, I'd say if we stay above the 111.5 area, then the chances for a second shoulder at the moment are quite good, and we could then be forming that and then looking to see whether it will then turn down. And then you've got some really big moves down on the downside potentially, testing that long uptrend, September 2016 today uptrend. Well, that's trading around 109.06 at the moment. That could be under pressure if this happens, and it suits a lot of what the Japanese need and the US need in a certain degree as well.
So it's going to be interesting, certainly, well, mid-December, looking at the chart, maybe, or going into the end of the year, one to look out for. Let's have a look at the Aussie.
It's a favourite.
Yeah, you've got to love it, technically.
I even had people come up to me this week and say, that Aussie, it's brilliant. It just absolutely just follows that channel. And, okay, it spiked over, didn't close above it, we're still below it. But you look at and look how much support there is. There's a load of support areas and Fibonacci areas all around about a 75.25 area. If it stays above that, it will be interesting. Potentially a double bottom again. We've had a number of instances of that earlier on. But the overlying trend about this is still this channel that's pointing downwards. We're working along it nicely. Thank you very much. I can understand why it's not moving down at the moment because of this area of support, but we're coming to a crux within the next week or so. Literally, by this time next week, we ought to know. If we get above the long moving average at 76.92 at the moment, then we're going into neutral. If we get above the medium moving average at 78.35, then we are in a different sort of ball game completely. This is the bearishness that's been in the market since September has ceased to exist. But at the moment, you've got a lovely little piece of resistance. The top side of the channel is at 75.96. That's where it is at the moment. Support around about 75.28 down to about 75.18.
And finally, the South African Rand.
This is the unusual one because we had, this time last week, we were sitting around talking about the ratings. And what actually happened is there was one rating was, I think it was S&P's, had gone down to junk, and Moody's had deferred it until February. So it's not the worst possible situation, but we've had a flow of money come back into the Rand effectively, but only limited. 1364.97 is a 50% fib of this move up from September through to November. We've gone below it, but we closed on it for 2 consecutive days. That's indecision. It broke the uptrend, which I've left on there so you can see how effectively it's broken it. But it's undecided once it's done that. Okay, it's like walk through a door and go, what do I do now? What do I do now? Where do I go? You've got good support at the medium moving average of 1347.30 and even better support at long moving average of 1330.65 at the moment. Both those are holding the market up, plus this 1364.97 on a closing basis. So I'd be very curious to see. It wouldn't surprise me if perhaps this is going to move up and maybe test that old uptrend again, but from the bottom side up. And then, dare I say it there again, what kind of pattern does that look like? It looks a bit like what we spoke about in dollar yen potential. Yes, but it's too early to say. But if I mention it, it's out there. I'm not certain about it, but it's an interesting pattern at the moment.
3 pairs, if you had to pick one to really focus on.
The Aussie.
Brilliant. Eddie, thank you very much for joining us today.
Thank you very much.